Welcome to Get Rich Education. I'm your host, Keith Weinhold. We certainly love real estate and its returns here, but you don't have to own property to get the benefits. Learn how to invest in real estate debt for a fairly predictable, high cash flow yield with low hassle, and you hold on to tangible collateral all the while, too. We're learning about how private money lending works in real estate today on Get Rich Education. Hey, is your IRA in a real estate syndication? Yikes, a 37% UBIT tax could hit you, but you still have a chance to set up your EQRP and avoid this. Did you make too much money in 2020 and need more deductions? Now federal law lets you set up an EQRP in 2021 and get deductions for last year, retroactively. Even put old IRA and 401k money in Bitcoin, gold, or your own business. Get control of all of your retirement money, tax and penalty free. Text EQRP in all capital letters to 72,000.
You're listening to the show that has created more financial freedom than nearly any show in the world. This is Get Rich Education.
Welcome to GRE, from the Italian Alps to the Peruvian Andes and across 188 nations worldwide. I'm Keith Weinhold. This is Get Rich Education. Here in our 7th year of show production, we've most often educated on and discussed real estate investing on the equity side, where commonly you place a small down payment on an address and then you take out a loan for the balance. But investing on the other side, the debt side, that's a lesser used tool. This is where you can, in fact, be the lender for a piece of real estate. Now, if you look around your hometown at how business and society works, when you think of a lender, you think of a bank, JP Morgan Chase or Wells Fargo or Bank of America, and they often have some of the biggest, tallest, shiniest, most valuable buildings in your town. Well, banks stay in business and are enormously profitable because they create arbitrage. Yeah, arbitrage, again, that's such a sophisticated sounding word, isn't it? But arbitrage just means that banks borrow at a lower rate and invest at a higher rate. So the arbitrage just means that's their spread. So what banks do is they take a loan and then they make a loan. So now, if you park money in a savings account at a bank today yourself, here in 2021, a bank might pay you 0.5% interest at the most. Well, then that's your yield. So then what banks did is they took a loan from you at that 0.5%. Yes, this makes everyday savings account holders lenders then actually. Okay, all the while they're paying you that 0.5%. They turn around and invest it for, say, 5% or more. Well, that spread of 4.5%, that is their arbitrage. Well, they do that with a few $1 billion, and you start to understand their profitability. So yes, savings account holders are then lenders. You may just not have thought about it that way before. If you buy a federal bond, you're a lender too, and you're only getting perhaps a 1% yield there today. It is an epiphany to some people that a savvy investor like you can be the lender yourself on real estate, and you can lend to an operator with a track record, and you can get paid 6%, 8%, 10%, or 12% returns, and it's backed by something real with stable value like real estate. Therefore, it's like a bond wrapped in real estate, and so you don't take a 100% credit risk. In fact, the value of your collateral rises with inflation, this real estate that you're holding on to. So this results in a low friction stream of income for you, in addition to being high yield. Today, with just about every interest rate type out there at all-time lows, a lot of lenders, and again, if you hold a savings account or bonds, you're a lender, those lenders are yield starved and they need fixed income. We're talking about more income than what comes from stock dividends here as well. And when you make a private secured loan on residential real estate in stable areas, if you can find that confluence of factors with an operator that has a track record, well, then the value of your underlying principal, that tends to be more stable than it does with the stock that underwrites its dividend. Plus, with what happened last year, a lot of companies with stock, they've had to get lean, and cut their dividends. Now, before you lend money to someone, you want a predictable return on certain terms. There's some things that you need to know. You need to know when are you going to get paid back and having assurance that you'll be paid back. You need to secure that collateral, that piece of real estate that you're lending on. And you also want an operator with a long proven track record. And then, of course, you want to know what your return is going to be. Now, realize that if you get an 8% return on a private loan that you make, that's actually a better return than it's been historically. And that's because inflation is low now. In a high inflation environment of, say, 5%, well, then an 8% return is awful because that's only a 3% real return net of inflation. So today, with inflation still low, although pressures are building for more inflation later, but with inflation low, your 8% return is actually better on an inflation-adjusted basis. Now, I've talked so much here on the show over the years about how your ROI from home equity is always zero. So if you have $100K of idle equity in your property, which has zero return, and you want to get a 6% yield on it, well, you could borrow it out at 4%, invest it at 10%, and there it is. There's your 6% yield, known as arbitrage, and now you're doing what the banks do. Now, in real estate, as a private lender, often the party that you're making that loan to is a company that rehabilitates distressed property, like property that's been foreclosed upon, that can be in disrepair, sometimes even with ugly conditions like rusted pipes or roof leaks. Well, see, a rehabber, they can't go borrow money from the bank for these loans because of the condition of the property. It means that they don't qualify for traditional financing. So then when the bank cannot make that arbitrage, they can't make that spread, then everyday investors like you can step in and do that. So passive real estate investors like this because you don't have any tenant phone calls to deal with. There is no tenant. When you control the property just as a collateral, well, then the rehab company controls the maintenance of the property while they're the ones making the repairs. And any mature, reputable company will send their short-term lender. They're going to send their lender like you progress photos, perhaps monthly, so that you can see how it's coming along. So the income creation is pretty straightforward. If someone lends $100,000 at a 10% interest rate for a year while the property is being repaired, well, you've just created $10,000 of passive income during that period. Let's learn from an active practitioner in the field here. Let's find out whether private lenders get higher returns for making a loan to buy and repair single-family homes, or if it's higher in apartments and a lot more. This week's guest is a licensed realtor, distressed property specialist, and she's been a no consultant since 2009. She is the co-founder and CEO of Freedom Real Estate Group. They're based near Dayton, Ohio. She's also a fellow member, along with me. We both serve on the Forbes Real Estate Council. She grew up in Phoenix, Arizona, but she moved to Ohio years ago, and that's specifically because it has stable real estate market values. It is cash flow country. You might remember that she was with us last year. She's back to tell us how to get some of the most passive, stable cash flows anywhere. Welcome back to Get Rich Education, Dani, Lynn, Robison.
Thank you so much, Keith. I really appreciate you having me.
Dani, you guys keep growing over there at Freedom Real Estate Group and your entire group of companies there. How many employees do you have now?
We have 35 employees.
It's interesting to watch you kind of slowly and sustainably grow over time. And really, one of your lines of business there is you take a beat up property and you make it pretty. So a lot of it is basically these at scale fix and flips that you do. And you really help people solve problems. And the genesis of that problem solving is really with what we think of as a distressed seller. Tell us about some of these distressed sellers and some of these situations that you save these people from, basically.
This is one of my favorite parts of the companies that we have and run is when we're able to help communities and sellers who are unable to sell any other way than to an investor like us. So they may have a property that just needs a lot of work. And so they're going to look to an investor who's got the capabilities of doing that work. Sometimes it's landlords with tenants that are already in them, and they're just tired of being a landlord for whatever reason. And we're willing to buy those properties that are already cash flowing. That's my favorite part, actually. And then take them on ourselves and collect the rent. These sellers are usually in situations where they talk to multiple realtors and aren't able to define how they're going to be able to get out of the situation that they're in order to solve their problems, whatever those may be. And we're able to step in and provide numerous options to be able to solve those for them. It's great.
Yeah, now this is interesting because some people think, oh, well, why doesn't that seller just list it with an agent? Like, isn't that the easiest thing for them to do? But the agent might know that if they take on this distressed property that has a roof that leaks or a heating system that doesn't work, and then this distressed owner doesn't have the funds or the wherewithal to replace it, an agent doesn't want to take that on because oftentimes that's not even financeable for someone that might buy through that agent. So you swoop in with cash and you close quickly. So you help solve this problem for people. So yeah, we're thinking about people that are in distress, like they had a death in the family and maybe they didn't even reside in that home before, but their mother or father died. And now they need to know what to do with this property and they don't know anything about fixing it up and they're not interested in fixing it up, or there's been a divorce. Or that was interesting with what you talked about people that are landlords and just decide they want out. They no longer want to be landlords. That's something I had not been thinking about. Another one, someone that's in the middle of a new construction property and they realize, oh, they don't have the funding to finish the project themselves. That's another example of distress that some people just might not think about.
That is correct. You brought up a lot of them. I especially like that you touched on the financing part because that is an issue. And sometimes they don't even realize the issue. So you have to help educate them of the obstacles that they're going to have to see and go through. And we do provide that cash and close fast so they get their solution and they get it quickly.
Tell us more about what makes a good property in identifying those, whether that's the type of property or its location or whatever else.
We like the B and C class areas where you get really good cash flow. You also get that touch of appreciation. I don't always talk about appreciation because we live in good old boring Ohio where we don't have those big swings back and forth. But the location and where we're investing is very, very important. And in a state like this, we're not going to get into a lot of A-class areas. So just blue collar areas where we're going to have good tenants, good cash flow is what we're looking for. And then we really like the ideal thing is like a brick ranch house, 3-bedroom, 2 baths. We don't always get that all the time. Sometimes we have 2 1s and 3 1s. Right now, the rentability of these properties is absolutely amazing. We're seeing more and more renters out there and we're filling those properties. So we're just looking for those sweet spot areas.
We mean boring in the best way, Ohio. And certainly we're not talking as boring as watching a Cincinnati Bengals game or anything like that, but we're talking about stable properties and stable markets. Oh, come on. I love you, Ohio. When you talk about your ideal property, maybe it's something like a 3-bed, 2-bath brick home. Of course, that's ideal. And you do purchase other ones that are in distress. So I guess how much do you typically buy a home for? Maybe just on average? And then what would that property's ARV be? ARV is after repair value. What are we looking at there, Dani?
That's a great question. In Ohio, the homes are a little bit older. So we're typically going to buy homes for, I want to say $30,000 to $50,000, sometimes up to $60,000, $70,000. And then our after repair value, once we get in to do the rehab, is going to be anywhere from $75,000 to $120,000. That's a big wide range. And a lot of that is because of the amount of rehab. 80% of the rehabs that we do are $30,000 to $40,000 to $50,000. We are going in there and we're doing everything to these properties. When you have that much of a rehab, you have to be really good at making sure that you're buying low enough to be able to afford the property, be able to do that quality rehab, and then be able to sell it.
Yes, you've got to have that margin from the business side. I just think of all of the problems that are simultaneously solved when you do this. You solve that problem for the distressed seller, like we've already talked about. Of course, you're not doing this completely for altruism, but one good outcome is, it sounds a bit corny, but you really are making America better one home or one neighborhood at a time. You're kind of cleaning up the neighborhood, taking a distressed property, making it look good, giving it curb appeal again, allowing a quality neighbor to come into that neighborhood for others. And then you get loans from lenders in order to help fund these all cash projects so that you can close quickly. And you're also providing a clean return for your lenders. So there are really like 3 wins there.
There really is. And I'm glad that you mentioned that. When I first became an investor, we used to walk neighborhoods and pass out, little letters and put it on their doorknob that said, hey, we're buying houses in this area. And it would help us get to know the area, the people, the neighborhoods. And there was one time where I was walking down the street and I had these and I was putting them in the doors, and a neighbor came out and said, "Hey, what are you doing?" And I said, "Oh, we're real estate investors and we're buying houses in this area and we're on an improving values campaign." And that's the exact conversation that I had that you just touched on, that we're trying to buy properties in this area so that we can increase your values. She started telling me, "Well, this house over here, they need to sell." And it was just great. I'm glad you touched on that win-win.
An improving values campaign. Yes, a popular strategy with the neighbors in the existing neighborhood. Well done.
Thank you.
So you learn about deals like this in certain neighborhoods. How do you learn about those in the first place?
It's different methods. We do work with a lot of investors who find properties like this for us, and we're their major buyer. So we purchase properties from them. We also have VIP relationships with banks whenever they're selling properties. We recently purchased an entire portfolio. So the great thing about working with us is we do have a lot of experience. We can buy bulk packages. So this gentleman was an older seller. He wanted to retire and cash out of his properties. He had a 56 unit apartment complex and 12 single family and 3 duplexes, and he wanted to sell them all at once. And so that was another way that we were able to help solve a seller's problem and get inventory for us.
Yes, you and your company, you're really the ones adding the value to the property here in the value chain and doing a lot of the dirty work. But really the genesis of it before that begins is you need to know that you have enough cash accumulating so that you can come in and pay all cash quickly and make it attractive to these distressed sellers so that you can help to clean up the neighborhood. So tell us more about seeking these private lenders that you do, because traditionally banks don't loan on properties like this. So you really need to find oftentimes common everyday people that are savvy and have a little money to invest.
That's absolutely right. Private lenders are the reason why we've been able to grow our business as fast as we have, is because of those very important relationships. And I'm the only one that they get to essentially talk to at the very beginning. I get to tell them how everything works and walk them through the process so that they're comfortable, because it is the private lenders that start the entire process and allow us to be able to buy these houses fast and cash, because we're going to send them a funding packet and say, "Hey, 123 Main Street, we're getting ready to buy it. Here's the purchase price and the rehab. Are you interested in looking at it? Do you have any questions?" And they get to be a lender with us, get a great return, and we get to buy a house, rehab it, and then sell it to an investor who wants a cash flowing property.
Now, this kind of flips the mindset 180 degrees of how people traditionally think of real estate investing. Really, people traditionally think of real estate investing as a person themselves being a fix and flipper. And I often dispel that because that's sort of an active job. But here at Get Rich Education, we're often a real estate investor because we're putting a 20 to 25% down payment on a property and buying and holding that for the long term. But this flips that 180 degrees. So you, the listener or the viewer here, rather than you going out and procuring a loan, oppositely, you are the bank. You can give loans to companies like this that have mature private lending programs with a long track record. And in this case, it might work for you if you want a clean, no hassle return. It might also work for you if you're tapped out and you have your first 10 loans. This might also provide an income stream for you. We're going to talk more about that. If you don't have a good credit score or your debt to income ratio does not allow you to qualify for conventional financing, you don't need to do any of that qualification here because, again, you're not the one borrowing the money. You're the lender oppositely.
Exactly right. Yes. And the great thing about these deals is you can start with as little as $50,000. So we have many lenders that have come and they said, "Hey, we don't have a whole lot, but what can you start with?" And I begin to talk to them about the properties and the way we invest and the average purchase prices. And Tiffany is my transaction coordinator. Every single lender that I work with knows Tiffany because she looks at the numbers that are available, what their preferences are in terms of loans. And she looks at the property and says, "Hey, Joe, this one's going to be perfect for you. Tell me what you think about it." And so these relationships are so important to us. And there's really a wide variety of people that we get to work with.
And I've worked with Tiffany. She is very responsive. You talked about the $50K minimum investment amount for one to get an income stream that's really even more passive than turnkey real estate investing. Does one need to be accredited?
No, they don't. That's a great question. So we're still working with some accredited investors, and we do have some investments that are only for accredited investors. But I would say 80 to 90% of what we do can be done by non-accredited investors, even if you have small amounts like the $50,000 range or up. There's a lot of people that I've talked to. This has been a huge talking point because they say, hey, I didn't know there was an investment out there where I could passively get good returns and not be accredited because I haven't gone through those steps yet. So absolutely, we can work with anybody.
Now, the SEC's definition of an accredited investor, the short story on that is you need income of at least $200K per year single, $300K married, or have a net worth of $1 million, not including any equity in your own home. But you do not need to meet those criteria to be a private money lender. How long is one typically lending their money? When one lends it out, what's the duration? When do they get return of investment and return on investment?
Great question. So our standard loan terms are 12 months, but that doesn't mean your money is held for 12 months. Many times, if we buy a single family property, that's our ideal property, and it's a $30,000, $35,000 rehab. If it's vacant at the time of closing, we're going to get in and out of it in about 4 months. But the reason we do the 12 months is because sometimes it is a larger rehab. Sometimes it's a multifamily property. Sometimes it is occupied at the time of purchase. So we give ourselves a little bit of space to be able to handle the larger rehabs and the occupied properties. But sometimes it is going to be quick. And Tiffany is also very good at saying, hey, Keith, this one's getting ready to cash out. It's only been 4 months. Are you ready to do another deal? Because I can take a look and see what's in our pipeline. So you have very little downtime between the first project and the next.
Okay, so if money is lent out for 12 months and that first project ends within 4 months, is that when the investor gets the return, or at least gets the option of getting the return after the 4-month mark, or how does that work?
So because it's a note and mortgage, we legally have to return the funds at the time of the sale. So the investor is going to get their funds and all of the interest rate that were owed for the property. We also reimburse their bank wire fee, because I believe when I have these relationships that you're going to have to spend $25 to wire us the fee at the start of the deal anyway. I don't want you to have extra fees. I just want you to have the return. So we put all of that on the payoff statement that comes to you at closing. And then the title company sends a release of mortgage. And that's why we have to get that money back to you so that you can sign the release of mortgage, free the property up from all liens. And then Tiffany says, do you want to wire that money again? And let's do it over.
Okay. Or at that point, at that 4-month mark, would the investor also have the option of you just holding onto it and placing it into your next investment, either or?
That gets a little complicated. I will say, note and mortgage, no, we have to wire it. You have to receive it legally to sign that release of mortgage that you received everything. We do have a program. It's called a master note program that allows investors to say, hey, I'd like to give you $100,000 and I want you to use it all year round. And then that's a separate agreement that we're going to talk through, but that does allow, we just pay quarterly interest on that particular note of the $100,000. It could be for 1 year. It could be for 2 years. We've had an investor do one for 5 years. And he's just like, I love you guys. I trust you guys. Here's my money. Use it. And so we pay him on a quarterly basis. So we do have different programs for different people.
Okay, that could be an option for someone that doesn't want to do as much administrative stuff and make it even more passive for themselves then. That's interesting. Well, we're after returns, cash flow, low hassle returns. Tell us about the ROI that one can expect from being a private lender while they have real estate that they're holding as collateral during that lending period.
We are doing 6 to 12% returns on the funds, and every program is a little bit different. So for instance, the big, larger apartment complexes, those require more funds. They typically are going to give you the higher interest rate. Some of the single family properties, duplexes, are going to be in that 6 to 10% range. So it really depends on the property and the investor and how much that they're investing with us.
Oftentimes, a savvy investor wants to know about what the risks are. When Dani and I come back, we're going to talk more about the risks of private money lending. We've already talked about the rewards. You're listening to Get Rich Education. Our guest is Freedom Real Estate Group's Dani, Lynn, Robison. More when we come back. I'm your host, Keith Weinhold. Most rental property investors choose either cash flow or home price appreciation, but one real estate market can give you both. Jacksonville, Florida, with 27% lower home prices than the national median, 1% higher gross rents, and Jacksonville has appreciated 34% more than other comparable cash flow markets over the last 30 years. Get positive cash flow today and appreciation for tomorrow. To invest for cash flow and growth in Jacksonville, go to cashflowandgrowth.com. The people that our listeners can't stop talking about are Ridge Lending Group and MLS 42056. They provided you with more loans than anyone. It's where I got my last few loans, and they finance single-family income property up to fourplexes. They're the #1 lender for both beginners and veterans. Start your pre-qualification, chat with President Chaley Ridge personally, and you'll end up with your custom plan for expanding your cash flowing portfolio. Start at ridgelendinggroup.com.
This is Peak Prosperity's Chris Martinson. Listen to Get Rich Education with Keith Weinhold and don't quit your daydream.
Welcome back to Get Rich Education. We're learning about real estate investing on the debt side, where you're the lender rather than the borrower. You hold real estate as collateral during your lending period, and you get a very passive return in the meantime if you're really just cash flow centric. And this can really work for you if you have a more difficult time qualifying to get a turnkey type of property or some other reasons. A lot of people are concerned, of course, with risk. The average investor is thinking, well, it's a natural question to want to know. Now, how is my money being secured? How do I know that I'll get paid back? What do you like to tell those people?
The biggest risk when you're working with an investor is me. My personal failure to perform on the promise that I said to you, you're going to lend me $70,000. If I fail to perform in paying you back, that's your risk. So I always tell people, do your due diligence. Do it on me. Do it on anybody that you work with, because private lending is a trust-based relationship. But you do have protection in a legal format, and that is the note and mortgage that is on the property. And like we've said a couple times already, you're the bank. So you get to foreclose on me if I fail to perform, just like a bank would. And I will say that I've put out quite a few things, like an expert panel video with my CFO, with the title attorney, with a lender that's been with me for a couple of years, self-directed IRA specialist, and they've all worked with me. And I literally said, give them your name, your phone number, your email, let them call you and ask about me and your experience, because I think that's the most important part of this.
That's true. You're very transparent and forthcoming with those sorts of things. In fact, I know that lenders that have lent elsewhere previously and they did not have such a smooth ride, often they've ended up lending with you.
Yes, I have been on the phone quite a few times with lenders that had a horrible experience, heard me on Keith's podcast and said, hey, I wanted to give you a call because you sound real. You sound like you know what you're doing. You've got the experience. This is what happened to me. So talk me through what happens to me, if that happens with you. And then I give them all of this information. I do explain to them, call the title company, ask them if I've ever, one, failed to perform on a note. Ask them, number two, if I've ever failed to not pay what was promised. I've never done either. I have personally lost quite a bit of money on a few deals, but my private money lender has never lost any money on the deal. So I understand in real estate, you're going to lose money every now and then. And anybody who gets into real estate, I hope you all know that you're going to lose money every now and then. However, as a private money lender, you're not going to, at least with me, ever lose money, because I will lose it myself and I will still pay you exactly what was promised.
Let's talk about how that works. If you buy a distressed property and you don't find out until after you bought it, for example, oh, there's extensive water damage up in the ceiling that dripped down and ran into the walls, I'm going to end up losing money on this deal. That's what you're telling yourself. So then how does that lender still get made whole? Where do those funds come from?
I'm the one that dips into my pocket to pay the extra. So if there was going to be a profit margin, well, I just wiped it all out by taking it out of my pocket, paying for what we missed. And that's what happens in real estate, which again, I tell people the great thing about us is we are volume for that very reason. If we fail on 1 to 10 rehabs, it's okay, because we've got 9 rehabs that performed exactly like they should have. And the profit's still coming in. We're still running a very successful business. And that's how the lenders can mitigate their risk too, because they know that they're investing with us and we've already thought about that.
And part of the way you mitigate your risk, you touched on it, is because you do a high volume of business and therefore you're able to have that 1 in every 10 properties that doesn't work out. So tell us about your business volume.
This year, we're hoping to break 100 deals. We did 72 in 2019, I think 67 in 2020, and we are ramping up. We hired more people, as we just said, 35 employees now. So we've got the capacity to be able to do over 100 deals, and I'm going for it.
Now, part of that investor securing their money when they lend it to you is with the title company, and you are happy to work with any attorney, and that's seeing that liens are properly filed so that that lender knows that they do have that collateral. And interestingly, you are actually improving the quality of the lender's collateral the entire time as you fix it up. But tell us more about that relationship with the lien.
When you approve a deal and you say, yes, I'd love to be the lender on this property, then Tiffany introduces you to the title company, and the title company attorney starts preparing that note and mortgage. That note and mortgage goes to Tiffany for a real quick review first. And then once she says it looks good, it goes to the lender, they review it, and then we go to closing. That's when the title company says, okay, here's the amount of the funding. They give you wiring instructions. Only get that from the title company. Never get it from anybody else. And you wire your funds directly to the title company. So it's not hitting my hands, Tiffany's hands, nobody's hands is touching it. It's going straight to the title company. Then after all paperwork is signed and we close, that's when the funds go over to us for the rehab so that we can get started. And then when it's all done, again, we talked about it just briefly, that a payoff statement is created. Lender looks it over, reviews it, sees their principal balance, sees their interest, sees that wire reimbursement fee, sees that it all added up to exactly what they are owed. And at closing, that money is sent right back to them.
So you and your company have this set up in a, maybe it's not a great choice of word, but I'll call it somewhat of a turnkey fashion to be sure that that lien is properly filed such that that lender knows that they do have that secured collateral. However, outside of that relationship that you've made easy for them with your attorney, you are happy to work with anyone's attorney. If a lender has a particular attorney that they want to use, you're certainly welcome to go ahead and do that as well. I think one wants to know then, how long does this process take? So for example, when one funds with you, when one says, okay, here's a 100K and we'll try this out, how long does that take for those funds to actually be placed?
That's a great question. And I always tell this story. So Flip is in charge of acquisitions. I'm in charge of private money. So he and I have this little fight that we go back and forth. And I say, I have a lot of private money. I need more deals. And then when he goes and buys a bunch of deals, he says, I have a bunch of deals. Go get more money. So we're always kind of playing back and forth. So it really kind of depends on the conversations I'm having and what the lenders are saying. Hey, I have this available. And I say, okay. And then I'm going to have Flip go out there and go get more deals. So we try to place all funds very fast. If we do a big raise, then it might take a couple weeks, but Tiffany does a good job of placing lenders quickly.
And that's a remarkable marriage. Your husband Flip, so he's in acquisitions. He's the one finding the property. You are getting the funding. And they often say this is like a milk and cereal relationship. And it's difficult to have those ratios just right. If you have too much milk, meaning money, then the cereal's too soggy. If you have too little milk or funds, then the cereal's too dry and it doesn't work out. And it's always hard to get that ratio of acquisition and fundings to meet up just right. Talk to us about the source of funding. Are retirement funds available? HELOCs, cash? Tell us about that.
Most of our investors are using their cash or their retirement funds through self-directed IRAs or solo 401ks. Certainly, you've got other options like the HELOC. You've got cash value life insurance. There's many places that you can access funds. But like I said, the majority is through retirement accounts and cash.
And this really is hands off for that lender investor. You do give updates monthly. I believe it's the 20th of each month to everyone. However, they can come in and ask for updates as an investor lender anytime outside of that schedule if they want to. But yeah, it's passive. It's hands off. If you're an investor in Brooklyn, you don't have to fly in to paint the living room on one of their rehabs. Or if you're in Boise, you're not going to be called to come in and replace the cabinets. It's truly hands off. They're doing the work.
That's right. Private lenders love that. In fact, some of ours have emailed Tiffany and said, hey, can you send me like weekly pictures? We just love watching the process so that they can feel like they're kind of hands-on and being excited about seeing something not looking good all the way to the beautiful stage. It's a fantastic relationship and they can get money passively, but still have the experience along with us.
I just thought of something interesting. Since you also have a turnkey division of the business where you sell properties that are already rehabilitated long-term to a buy and hold investor, have you ever had a private lender that sees the progress that you get on these rehabs as the carpet goes down, as the walls are painted and so on? Do you ever have a lender that ends up buying that as a turnkey and holding on to it because they kind of feel this connection to it since they're also your lender?
Yes. So we haven't gone all the way to fruition, but in the last probably 3 or 4 months, I've had a handful of people ask that question for the very first time. Can I be your lender? And then can I buy that property? So we created a new program that allows the lender to be a VIP on the property, meaning when it's done, they get option to purchase first before we send it out to our other buyers. So that is brand new, just rolling out. So we haven't come all the way to the finish line on it yet, but it is something that we're giving the option to lenders for.
Okay, that's interesting. A lender basically gets a first right of refusal on the property, whether they want to own it themselves or not. So then they transition from being on the debt side, flipping over to being on the equity side as that turnkey owner. And either of these strategies and both of these strategies can make sense depending on what season of your investor life that you're in. Tell us more about that typical investor, Dani. What really happens? How much does a typical person invest? What kind of person are they?
A lot of the investors that are coming are the non-accredited investors who never realized they had an opportunity to get this passive income through private lending. And they're getting educated about it through places like this, where we're talking about it. And so a lot of people will have $50,000, $100,000. Sometimes, in fact, they'll come and say, I have $100,000. I'd like to try a property out with you. And then suddenly after we do our first deal, they're like, oh, that was great. I actually have a couple more $100,000. I would say that's how the relationship tends to begin with most of our investors. Even if they have a really large amount, they kind of test out at that $50,000 to $100,000 level and grow from there.
Yeah, that makes sense that they would want to dip their toe in first and see how it goes. And part of that is learning more about their private lender program with a report that Dani and her company put together for you. You can check that out at getricheducation.com/lending. And the report is about 12 to 14 pages long, and it's organized in this question and answer format with a lot of attractive photos. It's laid out pretty well. It includes a link to that expert panel video with Dani's attorney and some other panelists talking about how this works. And even if you are so interested, it includes a link to Dani's calendar where you can book a call if you'd like to do that. Again, you can learn more at getricheducation.com/lending. Dani, are there any last things that someone might need to know, especially if they're new to a private lender program like this?
I would just add to not be afraid to jump on a call with me and start asking questions, because there's been many times where I've been on the phone and the prospective lender at that point in time said, man, I'm really glad that I listened to this podcast. I am really glad that I just took the next step of talking to you, because you said there's no commitment, there's no obligation. You could just give me a call and ask the questions, because I didn't know this was possible. I feel so much more comfortable after I know I've been able to think about it and ask you these questions. So I would say just don't be afraid to take that first step, because a lot of people, that's the only step they need to do. And then suddenly they're a private lender and they're so proud of that accomplishment of being able to invest in real estate passively. That's what I would add.
If this sounds like it would help you out, again, it starts at getricheducation.com/lending. Take a look at that report. And if you like what you see, you do have Dani's calendar link there. Yeah, I really encourage you to get on the phone with her and ask her some of those questions. Dani Lynn with Freedom Real Estate Group. It's been great having you back here on the show.
Thank you so much, Keith.
Yeah, great stuff from Dani again, much like she brought us here on the show last year. And I know that a lot of you have successfully invested through her since then. If you want simple investing with a strong return, this is a type of strategy you're just probably not going to hear about in Money Magazine. As she said, she has never failed to perform and always paid there at Freedom Real Estate Group. And by the way, her full name, don't get tricked on the spelling, it is Dani Lynn Robison, not Robinson. There's no N in the last name. When you're vetting an operator, find out who they're working with and what experience they have, and see if they've defaulted on any of their past deals or ever paid any less than what was owed. That expert panel video that's inside the report that she put together for you, that goes into some of those questions. When you talk to Dani or any operator like her that provides these private lender yields, some good questions to ask, and what she'll tell you are some of her favorite questions to get are questions you should be asking, like, how many property flips did you do? Have you ever defaulted on a loan? Do you have any references that I can talk to that can speak to what you just told me? And do you have capital to pay me off even if you lose money on the deal yourself? And an operator's references, that should include people like lenders that have been working with them for a number of years, and the title company and CPA that they work with. That's all due diligence that can be done as a private money lender. Again, much of this and more is available in that report. You sure may ask other questions. My personal experience has been good with this company. In fact, even on the footer of the emails that they send, the signature line there, I guess, here's what it says. Our family of companies have a zero inbox and return call policy. It means that all emails and voicemails must be replied to within 24 hours. That's what it says. That tells you a lot about the responsiveness there. And yeah, they often are involved with real estate projects in the Midwest and South. So both within and beyond their Ohio base there. When it comes to the combination of stable real estate values and cash flow, it's pretty hard to beat Ohio. And I do have an affinity for Ohio in that way. In fact, you might remember I mentioned it here a few weeks ago, the latest U-Haul data that showed one-way arrivals minus departures. Ohio ranked 4th out of 50 in the nation. There is in-migration there as more people seek affordable, low-cost suburban living, and you'll find a lot of that in Ohio. So do what the banks do. They borrow at a lower rate and invest at a higher rate. They hold real estate collateral the entire time, and they pocket the difference. What you're doing is you are renting out your money. And hey, like the banks, you can decide if you want to occupy a 40-story tower like JP Morgan Chase. I bet you won't, though. You'll enjoy the income stream wherever you are, thanks to an astute and really impressive woman today, Dani Lynn Robison. Private lending can really be some of the most passive, predictable income in the entire real estate world. You can get started at getricheducation.com/lending. Until next week, I'm your host, Keith Weinhold. Don't quit your daydream.
Nothing on this show should be considered specific, personal, or professional advice. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Get Rich Education, LLC exclusively.
The preceding program was brought to you by your home for wealth building, GetRichEducation.com.